Hello. The Chancellor has just delivered his autumn statement to the House of Commons. I'm Bob Truncheon, and I've got with me my fellow tax partners, Patrick King and Nigel May, to try and help us understand the ramifications of some of his announcements. Now, this year is quite an interesting year because he laid down in the Second Finance Act of this year a triple tax lock. This precludes him from raising any further revenues from income tax, national insurance and VAT during the course of this Parliament. So if he's needed to raise any extra tax, it's going to be by finding wriggle room. Now, Nigel, perhaps you'd like to make some comments on that.
I think, Bob, it's fair to say that a Chancellor will always have some wriggle room, and this one's no exception. Whilst he's blocked the opportunity, perhaps, of raising income tax, national insurance or VAT, the easiest way to deal with raising some extra revenue is just introduce a new tax, and that's what he's done. With effect from April 2017, a new tax called the Apprenticeship levy will be introduced, and that will be charged at 0.5% on an employer's payroll costs. What that will mean in practice, because there's a £15,000 credit given, employers who have a payroll cost of more than £3 million will be paying 0.5% on the excess of their payroll costs over and above that amount. That won't be welcome at all, and must be viewed as being quite surprising given what was said in the run-up to the 2010 election by David Cameron about trying to move away from jobs taxes. We've now got the introduction of a brand new one over and above what's already happening with employers' national insurance.
And this is on top of auto-enrolment.
Yes, indeed. Yes, indeed. Many employers will already have gone through their staging date for auto-enrolment purposes. Small employers will yet to have reached that date themselves, but in that we're dealing with large employers here, and they will be paying now 0.5% auto-enrolment pension contributions and the jobs tax, employers' national insurance, all together.
So rough size of payroll, you said 3 million. How many people would that be roughly?
Well, we thought that probably what you're looking at is an employer paying average salaries to 120 employees. It's not entirely clear though, because it depends on whether the levy will be charged on salaries including employers' national insurance or excluding employers' national insurance. That will come out in the detail, we think.
Okay, thank you. Patrick, turning to you, I believe there have been some changes in the buy-to-let market to carry on from those that he announced earlier on in the year. Perhaps you could talk about those for a moment.
Well, yes, not only buy-to-let, second homes generally, but just to follow on from what Nigel was saying, how a very easy way of raising more tax is to invent a new one. Another easy way to raise some more tax is, of course, to pick taxes you haven't put the triple lock on. And in this case, he has dug around in the tax book and found stamp duty. And what he's decided to do is, with people buying second homes or buy-to-lets, from April 16, there'll be an additional 3% charge for stamp duty purposes. Now, it looks like that's not going to apply to corporates, although there's a suggestion in the notes that we received an hour ago that it will there'll probably be an exemption for corporates with more than 15 properties in. So the suggestion is smaller companies, perhaps ones you set up to hold a property or a small property portfolio, for instance, could still be caught. So an extra 3%. Now, the Chancellor said that this extra money, to some extent at least, will be used to help communities where there are a lot of second homes and it's causing a problem with the local market. And we hear about that quite a lot in the press. So I suppose that will be some welcome relief to certain places in Cornwall and places like that where there are many second homes. But all in all, it's extra tax.
Yeah. Nigel, I think there were some changes to capital gains tax in this area as well.
Bob, yes, there are changes announced, but not with immediate effect. Where one is dealing with gains on residential property, with effect from April 2019, the tax will fall due for payment 30 days following the realisation of the gain, rather than on the normal 31st January tax payment date. So that will reflect a significant acceleration in the payment of capital gains tax, which again won't be welcome. it does mean that you won't get to hold on to your proceeds or your tax proceeds for the length of time that you do at the moment.
It's not going to affect people who are living in their main residence, is it?
Well, gains on main residence will generally be free from capital gains tax. The issue that you've got, Bob, is, as you will understand, is that main residence relief does have exceptions to it. And if you've got odd sets of circumstances, you just have to be very careful with main residence relief, because you can inadvertently fall into an unforeseen capital gains tax charge.
Thank you. Patrick, on the similar vein, HMRC are likely to want to change the way tax is paid more generally over the next few years. Perhaps you could say a few words about that.
Well, yes, we had a few more details in the autumn statement about the digital tax account that the Chancellor announced back in March, I think it was. We didn't know very much then at all, other than he was going to get rid of tax returns for millions of people, supposedly. Well, now we see perhaps a little bit more detail coming through, and there's two things that perhaps worthy of note. One is that there's a suggestion that for people with very simple tax affairs, so probably employees with just a bank account or a couple of bank accounts, something like that, the revenue will have all the information they need from other sources. You won't need to send in a tax return anymore, and they will therefore, so they're announcing, issue you with a tax calculation at some point in the year, it doesn't say when, and that will be an enforceable demand for payment, which you will be able to appeal against. So I suppose if you've paid pension contributions they're not aware of, if you've made gift aid payments, something like that, you would have to write in and challenge the calculation. Otherwise, the calculation that the revenue send to you will be payable. We're not sure when. Again, as Nigel suggested with the property, this could be an acceleration of when tax is due. Now that's coming in from April 16 as far as we can see. Another change that they've announced relating to digital tax accounts is where people have small businesses, small companies, or even people with properties that they're renting out, so landlords. They will have to update their digital tax account quarterly, at least, the legislation or the notes say, so that the revenue have the information on an ongoing basis, almost real time, presumably to allow them to assess you. Now, it doesn't say you're going to have to pay your tax quarterly, but the implication, and I think we speculated on this back in March, is that there will at some point, at least, if not immediately, be demands for payment on a quarterly basis rather than currently annually. So again, acceleration, another way of getting more money in.
So it really will be the end of the annual tax return.
Well, in some cases, yes. In more complicated cases, probably not. The question remains whether it's going to involve effectively 4 tax returns when 4 times a year you're going to have to calculate your information to send into the revenue. Will people be able to understand it well enough to do that themselves, or will they need assistance in doing that?
Okay, thank you. Nigel, there were various items that we were expecting in the autumn statement that were conspicuous by their absence. Would you like to talk about those for a moment?
There was widespread speculation on a number of issues in the run-up to the autumn statement, where we expected that there could be nasties that came out. One instance where it can be said that there's qualified good news, and that's with regards to deeds of variation. That's where you change how assets devolve under the terms of someone's will or intestacy. The government had indicated concern that these were being used for tax avoidance purposes. The government's actually confirmed in the autumn statement that whilst they're going to continue to review deeds of variation, they're not going to take any immediate action. So with regards to looking forward, one would assume that one would not rush into these, but rather deal with them within the normal 2-year post-death window. I wouldn't see the need to rush those in the run-up, say, for example, to the presumably March 2016 budget. The other area where there's deafening silence, at least with regards to detail, is what's going to happen to pensions. Pensions have been a political football since A-Day in 2006. Governments have not been prepared to leave these things alone, and it was widely suspected that we would see consultation with regards to potentially radical changes to the pension regime. That may well still come with the March 2016 budget, and I think it may well be the case that people will want to get in whilst they can under the existing rules, at least whilst we have certainty as to what the current rules are.
Thank you very much. And thank you to you, Patrick, as well. One other matter I think that we were expecting to see in the autumn statement was an announcement on IR35, and that's where people supply their labour through a personal services company, and we were expecting some fairly radical changes on that. However, nothing has happened, so I think that the March 2016 budget is going to be quite interesting for the bits that were omitted from this autumn statement. Anyway, it only remains for me to say thank you very much for listening to us this afternoon, and if you want more information about the autumn statement, it will be available on our website, which is mcintyrehudson.co.uk.